Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Dah Sing Banking Group Limited annual report. Dah Sing Banking Group Limited offers a wide range of banking and financial services to its customers. The company's personal banking segment provides various services such as residential mortgage lending, personal loans, overdrafts, vehicle financing, credit card services, insurance, and investment services. In addition to personal banking services, Dah Sing also caters to the needs of commercial, industrial, and institutional customers through its corporate banking segment. This includes providing loans and working capital financing, trade financing services, and foreign exchange services. The company's treasury and global markets segment offers centralized cash management services for deposit taking and lending, as well as interest rate risk management services. Dah Sing also provides nominee services, engages in securities dealing activities, and manages investments in securities through its other segments. Furthermore, the company is involved in property investment and money lending activities, making it a comprehensive financial institution that caters to various customer needs. With its extensive range of services, Dah Sing Banking Group Limited has established itself as a prominent player in the banking industry in Hong Kong, Macau, and the People's Republic of China. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be summarized into key areas. On the growth side, operating income has increased by 14.1%, driven by higher net interest income from a wider net interest margin and stronger fee and commission income in insurance, wealth management, and securities brokerage businesses. Additionally, non-interest income has grown significantly due to one-off fees and an increase in fee income and net trading income. Opportunistic deployment of surplus funds into bond investments has also contributed to the growth in revenue, resulting in a 45.2% increase in net interest income. Furthermore, fee and commission income from contracts with customers, transaction-based arrangements, dividend income, and interest income from financial assets have all contributed to the overall revenue growth. On the decline side, certificates of deposit issued have decreased by 79.3%, leading to a decline in net interest income due to lower loan and deposits balances. Higher net costs in funding swap activities and an impairment charge have also contributed to the decline in revenue. The net income of a company saw significant growth in 2025, increasing by 20% to $476 million. This increase was largely driven by higher operating income and disciplined management of operating expenses. Furthermore, net income surged by an impressive 119.7% year-on-year, indicating a substantial improvement in the company's financial performance. In terms of profit margins, there were notable improvements across various metrics. Operating profit before impairment losses increased by 24%, while operating profit after credit impairment losses rose by 48.9%. Profit attributable to shareholders also saw an increase of 20.2%. Additionally, return on shareholders' funds improved from 6.2% in 2024 to 7.2% in 2025. The improvement in profit margins can be attributed to various factors. Net interest income declined by 8.5% year-on-year, but non-interest income saw a significant increase of 26.1%, excluding one-off fees, or 119.7% including one-off fees. Operating expenses increased by 6.8% year-on-year. The profit margin improved from 28.5% to 31.3%, indicating a notable increase in the company's profitability. The operating profit before credit impairment losses also saw an increase of $468,022 compared to the previous year. Overall, these changes suggest that the company has made significant strides in improving its financial performance and profitability. The company's financial performance indicates a strong ability to generate positive operating cash flow. This is evident from the net cash from operating activities, which has been consistently reported as positive on two separate occasions. On page 120, and again on page 293, it is stated that the company has generated $233,673 in net cash from operating activities, demonstrating a stable and healthy financial position. The company's debt level has undergone significant changes over the past few years. According to various reports, the total debt securities increased by $472 million from 2024 to 2025, indicating a substantial rise in debt levels. Additionally, customer deposits and other liabilities have also seen notable increases of 92% and 29%, respectively. However, it's worth noting that while the total financial liabilities decreased, the company's debt level still increased. In terms of interest expenses, there has been a mixed trend. Initially, interest expenses decreased significantly by 34% from $6,858,939 to $4,534,239. However, this downward trend was short-lived, as interest expenses later increased from $11,586,000 to $17,146,000. This indicates that the company's interest expenses have not remained stable and have instead fluctuated over time. Overall, while there are some discrepancies in the reports, it is clear that both debt levels and interest expenses have undergone significant changes within the company. The company's performance across various segments and regions has been mixed. On the positive side, the trading business, treasury and global markets, and non-interest income have all shown significant growth. The trading business has performed well, while the treasury and global markets have seen a substantial increase in profit of 54.6%. Non-interest income has also increased by 16.2% year-on-year to $68 million. In contrast, some segments and regions have underperformed. Corporate banking and private banking in Hong Kong have experienced a decline in both cost and carrying value. Business banking in Hong Kong has seen an increase in accumulated impairment, indicating potential financial difficulties. Furthermore, the overall banking business in Hong Kong has performed poorly, with decreased carrying values across various areas. Management is cautiously optimistic about the company's future prospects, with Hong Kong's economy expected to expand at a steady pace. To capitalize on this growth, they are focusing on areas within their control, including disciplined cost management and selective investment in growth areas. The company is prioritizing its personal banking business, while expanding its corporate banking services to cater to commercial, industrial, and institutional customers. They aim to provide treasury and global markets activities, manage interest rate risk, and invest in securities. Additionally, they plan to increase funding through debt financing, including subordinated notes, and invest in Chinese mainland and Macau banking businesses. Despite this optimism, management is cautious about the potential impact of economic uncertainty on future performance. However, their strategy appears to be paying off, with operating profit increasing to $0.69 billion in 2025 from $0.8 billion in 2024. Net interest income has decreased slightly to $5.83 billion in 2025 from $5.29 billion in 2024, but overall, the company's outlook remains positive. The company's financial activities have been transparent and consistent. One notable aspect is its commitment to rewarding shareholders through dividend payments. As per the provided information, the company has indeed paid dividends, as mentioned on pages 153 and 255 of the report. In addition to paying dividends, the company has also demonstrated a strategic approach to managing its capital structure by buying back shares. This move not only enhances shareholder value, but also reflects the company's confidence in its future prospects. That concludes the financial summary for Dah Sing Banking Group Limited. Feel free to comment below, and I will be happy to answer them when possible.